Now, RBI Governor Shaktikanta has briefed the media on the latest policy announcements as COVID-19 lockdown weighs heavily on the Indian economy. The RBI Governor has announced slashing of repo rate by 40 basis points from 4.4% to 4%. Meanwhile, the reverse repo rate also stands reduced to 3.35%. The 3-month loan moratorium has also been increased from 1st June to 31st of August. RBI Governor also said that the GDP growth is likely to remain in the negative in 2021. Measures have been announced by the RBI today and can be divided into 4 categories. First, to improve functioning of markets. Second, to support exports and imports. Third, to ease financial stress due to coronavirus. And fourth is to ease financial strain of state governments. Here are a slew of measures. RBI Governor spoke just a little while ago with regards to easing the economy, boosting liquidity. Here we're looking at slashing of the repo rate by 40 basis points, measures that the RBI has taken to somewhere revive the economy, give it the much needed boost.
After extensive discussions, the MPC voted unanimously for a reduction in policy repo rate and for maintaining the accommodative stance of monetary policy as long as necessary to revive growth and to mitigate the impact of COVID-19 while ensuring that inflation remains within the target. On the quantum of reduction, the MPC voted with a 5:1 majority to reduce the policy repo rate by 40 basis points, 40 basis points from 4.4% to 4%. Consequently, the MSF rate and the bank rate now stand reduced to 4.25% and reverse repo rate stands reduced to 3.35%. 3 months moratorium we allowed on the term loans, then on working capital we allowed certain relaxations and associated measures. In view of the extension of the lockdown and continuing disruptions on account of COVID-19, the above measures are being further extended by another 3 months from 1st June till 31st August, taking the total period of applicability of the measures to 6 months. That is from 1st March to 31st August 2020. The combination of fiscal, monetary and administrative measures being currently undertaken both by the government and the RBI would create conditions for a gradual revival in activity in the second half of 2021. Nonetheless, downside risks to this assessment are significant and contingent upon the containment of the pandemic and quick phasing out of social distancing and lockdowns. Given all these uncertainties, GDP growth in 2021 is estimated to remain in the negative territory, with some pickup in growth impulses in H2 2021 onwards.
Let's quickly go over to Rajiv Dubey joining us for more details. And Rajiv, please interpret this. This comes as a welcome move. The RBI Governor comes forward to slash repo rate by 40 basis points to 4%, increasing the moratorium. This has been welcomed by several sectors. Do interpret.
Yes, so Nabila, obviously the looming threat of possibly, falling into a recession in this quarter and the next perhaps is weighing very heavily on the mind of the Reserve Bank of India and its governor and the Monetary Policy Committee. So the biggest takeaway from this is that the 40 basis point reduction will be greatly helpful to all those businesses who are restarting, because this is the time when they will need those finances, and a reduction in the interest rate will be of big help at this point in time. Especially when they are looking for the lowest cost financing, or maybe they are converting their earlier loans into newer loans, in which case, again, they'll be able to convert at lower rates of interest. And the other big thing is the 3-month moratorium being extended to 6 months. Again, a big initiative which was expected even before this happened. The very fact that the government and the RBI is cognizant of this and is taking note of it and is implementing this, I think is a welcome move. The very fact that this interest that was to be paid in one bullet right after this 6-month or 3-month period moratorium period has now been extended again to a full year, is also a big help as far as the new industries are concerned, which are going to be opening up at this point in time. The export initiatives are also very, very useful because this is the time when some of the Western markets have begun to open. And although this, for instance, in the case of apparel, although this season is practically gone, but there are signs that export, demand and export orders are going to be revived. And so at this is the point in time when they really need this
Right.
help from the Reserve Bank and from the Exim Bank. Exim Bank has also been given additional funding. And finally, for the big corporates, I must say that I noticed after a long time that the limit that a bank can have with a big corporate in terms of funding to a very large house has been increased from 25% to 30%. That I found was a very interesting development, because
Right.
it helps any large companies also, which if they are in some kind of a financial trouble and they need more finances to tide over this crisis, in which case they can approach their banks and the
Absolutely.
banks will be
Right.
able to lend to them
Rajiv,
beyond this limit.
this is a timely announcement, looking at the RBI itself saying that inflation also, the outlook can't be predicted. We're looking at severe repercussions to the economy with the COVID-19 outbreak, and this has come at a time much needed. Thank you, Rajiv, for joining us for more details on that.
Hi everyone, Preeti Chaudhary here. Hope you like this video. For latest news and analysis, like and subscribe to the India Today YouTube channel. And don't forget to press the bell icon to stay updated. Thank you for watching.